right, guys, a good day to all. Sam here with you on a Tuesday, Tuesday, July 10th, kind of midday here. And as it's Tuesday now, with our new schedule that we're putting up here, we're going to be looking at traditional assets. So we poll our members within our members Discord, let them choose what gets analysis, and we have two FX spreads that are the winners today. So we're going to be looking at the dollar Canadian, and then the Swiss and the yen. Now, okay, so a lot of you are here because you have a passion for crypto and you're trading crypto, you're interested in crypto. So, I start off telling you we're doing Forex spread. Before you click away, I would just like to encourage you to stay open-minded to applying this methodology to other assets. So I'm assuming that if you're here, you're watching these videos, that you have an interest in learning how to apply this methodology to, well, likely to crypto. That's probably why you're here. But I just want to encourage you to understand that the methodology can be applied to any asset. It doesn't matter. It's crypto. It's the same thing on every asset class. They all trade exactly the same way. So as we sit here now, well past the halfway mark of the year, we've got a 7-month bear market in crypto underway. Now, sure, listen, I'm as passionate about crypto as anyone, all right? And I'm a believer. So, and I think you've all gathered that from the material that I present here. My bias is well documented, well established through many videos. But I don't want you to lose sight of the fact that what we're teaching you here can be applied to any asset class. So the point of combining the two channels, we used to separate them, traditional and crypto, is to broaden your horizons a little bit and understand that if you're going to take the time to learn this skill set, that it can be applied to other asset classes. So if you don't like what you're seeing in crypto right now, it's pretty easy to open an FX account, right? It does not take a huge capital requirements. It's infinitely easier to trade than crypto. Long or short is a click of a button. It's infinitely easier to trade than crypto. So just stay open-minded there. Right? So what I'm going to show you here, this could be any cryptocurrency. It could be any asset class, could be any equity, any index, any FX spread, any futures market. They all trade exactly the same way. Exactly the same. So again, if you're here and you're watching this video and you're interested in developing this skill set, I'd like to encourage you to think beyond just if you're in the crypto box, and just open your horizons a little bit. So with that said, we're going to look at a couple of FX spreads today. And it's going to be analyzed exactly the same way as if we were looking at some alt or Bitcoin or name your crypto. It's the exact same thing, guys. That's the point I'm trying to make here. So before I get too far into this, just a reminder to give us a follow over on Twitter. We're really making an effort to engage with our followers there. So it's everything from chart challenges or chart requests or showing you things we're looking at or trades that we're taking or have taken. As well as you'll find access to our public Discord where you can come in and get a sampling for what we're all about and how we try and engage with our members. At least you can get a feel for that. So I would encourage you to give us a follow over there, and you can find that link there to get access to the public Discord. Okay, so with all of that material said, let's get into the analysis here. So here's the dollar CAD. I'm looking at a 3-day chart. Now, I particularly like FX when I can get a count and a good count. Excuse me. I can get a good count. Sorry, guys, I'm back. A good count on a long-term chart like this. So you look here and you say, oh, that kind of looks interesting here, like we might have an Elliott count. Well, keep in mind here that I'm looking at a 3-day chart. So I'm working from this low down here. I'm looking at this here. So this is July 19th of 2011. The peak up here is January 11th of 2016. All right, that's a 5-year trend. So when you can find something like that really sparks my interest, because I will tell you that having traded in the Forex markets for many years now, the advantage of trading in Forex is that they are trending markets, as they're very driven by interest rate sensitivity and central bank policy. So when a trend starts, it can go for a very long time, and they tend to be very technical. So as we're looking here at a long time chart like this, and you can see an Elliott count that is Boy, pretty hard to miss this one. You know, would you have the patience to stay long for 4 or 5 years? Probably not, right? I don't know that I would. That's a very long wait. But we can certainly get an idea of where the trend is by evaluating this, and we get a sense immediately. We get a sense of trying to trade with the trend because we can see what the wave count is here. So we know anything here, if this is going to hold as a 4, we're looking for a 5, and we have a target up here that's pretty good move off of this 50 when you consider the scale that we're at. So 50's down here, call it 121. We got a target up here of almost 160. That's a home run ball there if it heads towards that. Now it's not going to go straight, right? There's always going to be retracements. But the fact that I can get this count here is very encouraging to me, and I like this. So this is a market that I would encourage you guys to consider looking at. So to the analysis, right? It's pretty. So let me just one note here. We go back to, what is this? 2001, I think. 2000 we hit here. Well, I got to 2002. Now this part here down to this low. I'm working off of this low here in 2011. I wouldn't try and count this as 1, 2, 3. I mean, I suppose you could, but I'm just working from this last significant low, and then I get a nice clean 1, 2, 3, 4. It wouldn't matter at the degree that we're going to be trading if this ends up, if we go back and we're 4 or 5 years from now, we're counting this as 1, 2, and this ends up being 3, 4, 5. It shouldn't matter to what we're going to do here, at least in the next few minutes of analyzing where we are as we get down to something that's more manageable as a trader than working off of a 3-day chart. Not that you couldn't work off of this, right? I mean, there's been very technical pivots here. You can see all we've done here is just wick a 50. Now that's 10 points. We're 10 points off of that, right? So at this scale, a move like that, pretty substantial. But we'll get it down to a smaller scale here. I want to make the point of showing you that these tend to be long-term trends. They are incredibly technical. And the longer term will be, I think, much more advantageous to you to be trading because there is a ton of noise in the FX market. It's hypersensitivity to the latest financial reports, right? The slightest little whiff of what might be a clue as to future interest rate policy, you're going to see a reaction to the market. So there's an incredible, you can actually see it here. We're looking at a 3-day chart, so you don't appreciate. But this kind of chop in here, that's happening over, that's 16 to, that's about a 6-month period right here of just chop. Now, yes, it is trending higher, and it gives us an A wave. But if you were down on a 15 or a 30-minute chart, that's going to look like insanity. So I would encourage you to consider looking at FX in 1 hour and higher. Right? Anything below that, there's a very real possibility you just get chopped alive from what happens in there. So longer term, always better in FX because you get to take advantage of these trends. So all of that said, I'm working off of this low. So I get a pretty clean 1, 2. Then I get a very clear impulsive 3, right? This long trend that we get established here. And look how technically it trades. So off of this pivot as our proposed wave 2 low, I get a nice 1, 2, 3, 4, 5. You can see all the subdivision is here in my 5th. It's technical on the way, so I can work. Do it this way. I can work from we see here from my 2 to my 3, looking for my 4. So there's my 3. Right. So here we come right where you'd expect it, right to the 38. We go up. We get target here. Look at the reaction. We get through second. We almost make third target, but you can see within this subdivision here. Now keep in mind, I am on a 3-day chart. Right. This is one step away from a weekly. I prefer it to the weekly. So look here. So we go from 2 to 3. We come. That's little. So look what happens here, right? And this is on a 3-day chart. So you get this perfect little tap here of the prior resistance becomes the support. That's a little front run on the 50, and then we go through. We almost get the third target. So from an Elliott perspective, boy, this is pretty extreme. So let me see if we even get anything that's workable here. So if I take the length of my 1 and project it from my 4 and then pull it over, what do we get? All right, so here's the 1618. So we go right into this little hot box here, which is the 161 of the length of the 1 from the 4 would be an extreme for the 5, and we go right into the hot box and then look at the reaction. So pretty technical, right? Hard to argue with that. And then from there, right? So on the assumption that we're in a 3-4, and you can see the nice little ABC, right? Hard to miss that. So just same thing, right? On a larger degree, I'm just taking the from my 2 low to my 3 high. Well, we're going right to the 50, right? That should be no surprise. Look how Vegas wave, Vegas wave. Now we get below the Vegas wave. Now it becomes the resistance back down for a test. So it looks like there may be some sort of a diagonal starting up here. So this could be the 1 wave. If we're going up for our 5th here, this could just be the 1 wave of what will get us ultimately to this 5th, if it's going to complete. So we've got a contender here, but it looks like some sort of a diagonal could be underway. We'll dig into that a little more closely on a smaller time frame. Just want to make that point. So here's your entry, and there's your target. So nothing different there, right? We could be looking at a 5-minute chart of Bitcoin, right? It's the exact same thing, guys. Same patterns, same probabilities, same analysis. That is, I will continue to repeat the value of everything that we're teaching you here, and it's ultimately only going to be valuable to you if you develop the discipline of doing the same thing the same way every time. All right, so that you might buck against that because you want to do something different. You want to be a rebel. You want to find something different that no one else is trying. I've been down that road. Look, guys, I've looked at everything. I mean, over 20 years, there's very little that I haven't looked at or tested and experimented with. And I'm telling you, having been down all those blind alleys and all those rabbit holes looking for something different, it's not different that will lead to your profitability. It's the exact opposite of that. It's the lack of doing something different. It's approaching the market the same way every single time. Now, all I can do here is provide the evidence of it. Right, and show you how to refine your skill set here, what to look for. But the patterns, whether this is, again, whether we're looking at a 3-day chart or a 3-minute chart, the patterns are exactly the same. And if you fight that, you're going to struggle with your trading. If you embrace it and say, oh, good, well, okay, well, if this is it, how do I learn this? How do I master this? Because it's very achievable. It's not rocket surgery, as I like to say. Yeah, is it nuanced? Is there a lot to learn? Yeah, but it's very doable. So, all right, get off my soapbox here. Let's just get into the analysis here, right? That's what we care about. What's happening in the market? Is there a trade here? Well, so if you're not long already, you're long. You're not. You wouldn't want to be chasing it here. But as we know, there's always a retracement. So if this is some sort of a diagonal going in here, if we've got something like this, right? We're going 1, 2, 3, 4, 5. Maybe that's our leading diagonal. That's the 1 wave of our 5th wave. So it's just, again, there's no pre-analysis here. I'm just doing this because my members would like to see a chart on it here. So let's tee it up, right? This is what I do is exactly the same thing I show you here every time, right? So that there's not like all the good stuff I'm saving. No, guys, that's the power of this, is the same thing every time. All right, so let's go from the 3-day down to the 1-day. All right, and I always would encourage you, whenever you're looking at FX, always check the daily. Right, we get all caught up in being looking at the 15-minute. With FX, you have to look at the daily. Same with equities. You have to look at the daily to get a sense of where we are. All right, so now as we come down to a daily chart here, we got to tweak some of this just a hair to see what we've got here. It looks like a pretty good diagonal. Well, let's see, is it technical? Well, just basic stuff here, guys. All right, so if I pull from my start of my wave 1, my wave 1 low here, and I go up to my 3rd high, if I get it right here, well, are we technical? Yeah, again, I didn't cherry pick this. I had no idea I was going to be analyzing this today. We poll the members, let them pick it, right? So do I need to? Is there anything more I need to show you than that? Right? I mean, how many times have I shown you that? 1,000? From every alt you can think of, because I've done hundreds of alts here, to the S&P, to equities, to here's the dollar Canadian, right? Same pattern every time. As I keep trying to tell you guys, right? That's to the tick. On the daily, right to the algo target. And what happens? Reaction. Right? I don't know how many more times I can put that in front of you, right? And does that mean that every time there's a 50, we're going to target? Well, of course not. Of course not. Don't misunderstand what I'm saying. It's not that it's going to make you money every time you see it and every time you trade it, but this is a pattern. This is a pattern that algorithms leave. This is the only algorithm that I know of that leaves footprints like this. God knows how many algorithms are running in the market. This is the only one that I know of that we can track, that we can identify, and we can say, I know exactly what they did last. Hopefully you find some value in that. All right, so given that we have a very technical leading diagonal here, I can stamp a one wave on that and feel pretty good about it. Like, okay, high degree of confidence that I've got a contender here, a solid contender for a one wave. Well, what does that mean? It's pretty. All I'm doing is dragging the top of the algo pull from the 3 to the 5. I've got a completed diagonal. Well, all right, what are we looking for next? Well, it's just 3s and 5s, guys, 3s and 5s. What are we looking for? Can we get that? Well, where are we looking for the 2? High probability zones between the 50 and the 618. Okay, so there's no reason to complicate things. Simple is almost always better. So how can I simplify this? What's this? What is? All right, so yeah, diagonal is a little tricky. You got to learn some of that, but it's not rocket surgery. All right, so we got a 3 wave that we're looking for. So it would appear that the A wave is trying to go in now. Do we get a little? Now it's not manifest destiny that we're going to go A, B, C. I mean, shit, anything could happen. But the probability suggests that if that's going to be a completed one wave, the probability is fairly high that we're going to get a correction of that, and that it's likely to take the shape of 3 waves down. Right? That's a fairly well-established pattern in the market. So we can just sit here now and on a daily chart, just sit and wait. So is there a trade here? If you came here looking for a trade right now, sorry, I don't have one for you. Maybe you could wait if you got a retrace here on a smaller time frame and trade from the A low to the B high. Nothing wrong with that. All right, just know that the odds of that getting to a new high are less likely than the odds of it failing and rolling over to give us a 3-wave correction. It's as simple as that. There are no guarantees, no certainty, only probabilities, and only tendency for the human emotion, the fear and greed that drives the market, to repeat. That's all I'm ever saying to you. It's not that I can tell you where the market's going. I can just tell you that there are probabilities here that are always in play. And if we can, the best we can hope for is to put ourselves in a situation where we can get an advantage, where we can at least be beyond 50% odds. Because you could always, you just flip a coin. Heads I buy, tails I sell. You could do that, right? You could make the case that that would be like sitting at the roulette table and you're going red or black. Well, it's not a perfect 50-50, right? Because we have the 0 and the double 0, and it's the house has the odds there. But it's not a perfect 50-50, right? Because we've got spread and commission and trading costs, and you're going to get stopped out. And it's not perfect, but you could make that case, right? Well, it looks like it's going up today. I'm a buyer. All right, put a stop underneath it. I mean, you could take that approach, but if again, why are you here watching this video, right? And at this point, you might say, "Oh, screw this guy. I'm tired of him preaching at me. I'm gone." But if you really want to understand this and understand how the markets move, you got to think like that. Where can I put myself in a position where I can get a slight edge? A slight probability edge on the market and create a scenario where I can get the risk-reward equation that I'm looking for, i.e. 3 to 1 is a minimum. Where can I find that? That doesn't mean that you're not going to get stopped out often. That's not what I'm saying. It's where do I get an edge? Where can I get even the slightest edge? What is a card counter after? A slight edge. That's all you can get. Casinos don't need much of an edge to take your money all day long. Now, you're going to win sometimes, but over time, because they have that statistical edge, well, we know what kind of money they make. All right, so let's look at this here. So if this is a 1, we're coming down for a 2. Well, is there a trade here? Is this a 1? Well, we can go down to a smaller time frame. So let's go to a 3-hour and see what we can find there. All right, so we can see this 5 has gone in here, and some sort of a that could be, we could have an ABC going in here. So it looks like I might have something along those lines. Maybe. Could be we've just got to, yeah, let's go down a little, let's go down to the hourly, right? So here is the lowest time frame. I would encourage you to stay here or above with regards to any trading decisions that you make. Okay, so there, well, I'm a little off here. If I, give me a second here, we'll tighten that up just so we're spot on it. Okay, so could be I've got 1, 2, 3, 4, 5. So it could be that we've just got this going on. So C's, well, C down here. So this could just be our A wave here, and we've got this subdivision here. It's a little tricky to see it here, but if let's go into put it in yellow. So I might have something like this underway. So I've got 5 down for my A wave. Let's drop that degree so you can see it. It's possible. 1, 2, 3, 4, 5. All right, so let's just check it real quick. Let's check the length of the third relative to the 4 and the 5. Do I get anything there? All right, well, you think that's a coincidence? Now, again, I just, like, I didn't cherry pick this. I didn't know I was going to find that there, so I deliberately went to the 1 hour so I could show you this because I had this all set up because it's the only market where you see this. No, guys, it's just pivot, pivot, pivot. Where do we go? All right, so I just showed it to you on a daily chart to the tick here. Well, now I'm on a 1 hour chart, and I'm damn near to the tick here. So, do you think we have patterns that repeat here? Right? Do we care? Do we care? Do you care whether I'm looking at a crypto coin, a cryptocurrency, or an alt, or Bitcoin, or Ethereum, or the dollar Canadian? Do we care as traders? Right? I can't answer that for you. I can tell you that if you're a trader, it shouldn't matter. Really. So the big differentiator between as from a trading perspective between FX and crypto is it's infinitely easier to short FX. Infinitely easier. There's actually no comparison between the two. Just to, I can continue to emphasize that to you, that I would encourage you to look here. Okay, so what are we looking for? So we're looking for some sort of a 3 wave, and then we're looking for a push down to our C. That's what we're after. Now, so given that we've hit this algo target here, is that enough to trade on? Well, I don't know that I would base a trade off of that, but let's see if there's anything more here that we can build on. Well, you know, so what did we hit anything here? Well, you know, always want to look left. Well, there's some that seemed to come into play. So some prior resistance here seemed to kick in right as we tapped it. And we've got an algo target. So it's the building blocks of confluence here. So now I've got 2 things here helping me. Now, so is that a long? Yeah, I mean, it's tradable. Sure, you could trade that here with a stop under this pivot. I wouldn't do anything beyond that, right? So you're just looking for a little scalp. You're trying to get into the B wave here, which we know can go that high. But then the anticipation would be it rolls over, and then we're actually looking for it down here at the 50. So let's just map it out. So what if that happened? So if we went here, we went right to the 618. Well, here's the algo target. So maybe we're going to be shy, right? But we know. So here's the kind of the conundrum that you run into. Well, this would be between from our pivot low here. We wouldn't quite be to the level 2 target. So if I go, let me go back to a 3 hour and show you what I mean here. So if this is done, we're looking for the buy. Let me get it up here. We're looking for the buy down here around the 50. Well, ultimately, it's between the 50 and the 618. That's our high probability zone. Well, if we do a little ABC, something like that, well, we're a long way from here. So again, you're back to, well, where are the probabilities? The probabilities are that we're looking for our wave 2 down here. Well, if this is my A and that's my B, you know, how am I going to get all the way down here? The symmetry looks off. Right, so you kind of have to look at that and think, okay, well, if that's an A, this could just be the start. So let's see if I can put it to you this way. All right, so if we're trying to get down here, we're trying to build a map as to how we could get there. Right, it's just a roadmap based on these probabilities. Well, how might we get there? Well, that's a possibility. That would take a hell of a move in the C wave. And what would be, well, let's just map it out. So if that were our A and where B is going to the 618, well, it's in the range of possibility. Here's our 1618, so that's That's not unreasonable for the length of the C wave relative to the A wave. That's a pretty good, well, here's the 100. This is the most likely here, 100 and 127. Going to the 1618, well, that's an extreme, but that's what that's what would be required. If this ends up being our A and we get that as a B, then we're gonna need to see a good clean 5 coming down here to this 1618. That puts us in the pocket here. This is what we're looking for. Here's the 50, the high probability zone. Here's our 50 for our wave 2. Right? That's what we're looking for. So if you're trying to trade this, for me, I wouldn't chase the B, but I would definitely consider the C. All right? If we can catch it here at the 618, that's definitely tradable. So I would let this shape and reveal. Are we going to get a good B here? So I'd let that come into the B, and then the next opportunity that I see with regards to where the better risk reward is. Let me get the short on here. If we could take it here with this kind of a target. So stop, well, you could, depending on the size, you could be on the other side of the 786. There's your target. There's 9 to 1. Even if we gave it a little more room up here, there's 7.5 to 1. Now, you see what I'm doing? So I'm saying if we entered here at the 618 and I gave it to the other side, why do I have 2 here? If I gave it to the other side of the 786 here, what's my risk rewards? There's 7.5 to 1. So I like the sell here more than I would like trying to buy into this here with a pivot under this low trying to get the B. That's me personally, right? I mean, there's certainly a trade there. There's certainly a trade if you want to try to look to get into that B wave, knowing that you're going to likely to get it to shape in 3. It's not a certainty, but that's the probability. Then the trade from the B to the C. I like that better because what do we have here? So if we pivot up here in this range where we'd be looking for that B, then we have a lower high. If we take this out, then that might be a place to add as now we've got a lower low. So we have all of the ingredients for that 3-wave correction, right? So it's a lower high relative to the last pivot, which is our 5-wave high, which is our 1-wave high, right? All the way back to where we started. There's our 1-wave high. Well, if that's A, B, and now I've got a lower high. If I take this out, now I've got a lower low, so I've got a short-term trend underway. Right? If that's going to continue to go down in 5, I'm going to have a series of lower lows and lower highs and lower lows as I work my way down, because the idea is this would, I can get this hot, we'd start coming down, and let's see if it'll, no, I clicked it, so it'll stop. So I have to do it this way. So we would come here, we'd get a 2, a 3, a 4, and some sort of a 5. So that's where we'd finish it down there. Right, I don't know, my scale's not great here. Right, so something along these lines would be what you're looking for. So this would be the next lower high that's lower than this high. So a series of lower highs as we work our way down through a series of lower lows. All right, so if you want to just keep it simple, you can think of it that way. That's what we're after, this probability zone. So you've got an opportunity to be a short seller here into that, right, with a very clear exit ramp. I know exactly where I'm getting out if I'm wrong, because the B, we know the B can go higher. Let's take that off. Okay, so we know a B, we can get an expanded flat up here. There's definitely room for that B to go beyond the 786. So I'd rather take my stop and then reload, let the market show itself, and then we try again. But the bigger trade, what trade that you're looking for is to try and get into the turn at the third. We're looking for the big one. So coming out of this, we're looking for that pattern to establish going the other direction. A series of higher highs, higher lows. So if we pivot here, and again, this is all hypothetical. If we pivot here and I get a move off of it and then I get the inevitable retracement, now I've got the exact same thing going the other direction. Now I've got a higher low. Break that, now I've got a higher high. Now here's yet again, same thing, right? We know this, right? This should be something we all know. So how we define a trend, a series of higher highs, higher lows, up or down. So this is the map that you're looking to lay out. Now, does it follow that exactly? Who knows, right? But this is where we define the probability zones, right? And that doesn't change. It's the same thing. Again, for the 5th or 6th time I've said this to you, whether this is an FX spread, an equity, of cryptocurrency, it doesn't matter. It's the exact same roadmap, same map. It's still just fear and greed driving it. All right, so that's what I would propose to you as I look here analyzing this. For my members who are interested in trading this, if you like the B and you like those shorter term trades, I'd keep it to the 1 hour. So for your pivots, and I'd look for the opportunity at the B to sell into the C, and then I'd look for the buy on the C to go into the third. If you just want to wait for and you want to be a buyer, because the longer term trend, right, as we know, if you take the B to the C, you are going against the longer term trend, right? So you got to be conscious of that and understand that when you go into that trade. But if we think about where we are in the larger degree, and we go all the way back out, well, we know that this is the pivot for our fourth, and we're trying to play in our fifth. So from that 4, if you want to stay with the longer term trend, then you're a buyer only. You're just as comfortable going short as long, which is just as easy to do in FX. And you're willing to be a swing trader, well, then there's an opportunity setting up for that B to that C. But if you want to stay with the trend, right, then you wait for the buy. You wait for the buy at that area where you're most likely to find a 2. Doesn't mean that it must go there, and that it could go all the way to 786, could go lower. But as long as we stay internal, we've got a candidate for a wave 2. So you want to stay on the buy side, then you wait. So no trade at the moment. You're waiting for this correction to complete. And then you're trying to catch this. Now, you want to play it more conservatively. You don't want to try and pick the turn. Wait for the 1-2. Buy the 2. You know where your stop is, right? So if you're buying the retrace on the 2, well, your stop's below the last pivot, because if it takes that out, you're wrong. And you don't want to be in, because you don't know where it's going. So it's always a matter of, okay, I think I've got a probability in play here that I might have a wave 2. So my stop's under here, because if it takes out that low, I am wrong. And there is no reason to stay in the market. You have to be willing to take that stop. Get out, wait for the thing to set up. Maybe it's happening down here. Maybe we go as deep as the 618. Maybe it happens down here. You say, oh, shit, I took a stop on that. All right, okay, well, we wait. Maybe we go to the golden zone. We get a little reaction. Then there's the next trade. We take the retrace here with the stop under the 65. Right? That way you're not trying to pick the absolute pivot turn, which I would be quick to tell you, you don't need to do. You don't need to, because there's always a retracement. Because the people who catch that, the temptation to take profit will be too much. Or there'll be an algorithm that'll be trading off of the 5-minute chart that will cause that. There'll be some reason that there's a retrace. There always is. And you wait for that, and then you take the retrace with a stop under the last pivot. If it takes that out, then you're wrong, and you don't want to be in the market. At least not on the long side. You don't want to say, oh, okay, maybe it's going to 786. Oh, well, I know I heard Sam say we could go to the 887. I'm sure it's going to bounce then. If I liked it up there, I must like it here. Well, I'll buy a little more. I'll average in. Those are the mistakes that really, 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 really get you in trouble. Take the stop. Best advice I can give you. I've been there. I've been that guy. Oh, I'm sure it's going. Okay, there's a report coming next week. I know that's going to turn the market. I don't know. I read on Twitter that everybody's, really, really bullish on the dollar, and with this trade war with Canada, I'm sure it's going to bounce eventually. It can't keep going lower. The market, I've said this to you many times, has I'm tempted to use the word a perverse way, but it's not. It's just the reality of the markets. The markets punish mistakes. Very, very rarely do you escape a mistake without getting punished, and that's a good thing, because it'll keep you from making the mistake again. That's why I never, ever, ever do that. Because I've done it, I don't know how many times, and then always went back, and then you're in that self-flogging of, God damn it, I knew, why didn't I just move I could have, why didn't, what? Right? That's a bad place to be in, because it was just very easy to sit the stop there, and all you have to do is keep yourself away from the mouse. You put the trade on. You took a calculated risk. This is a business decision. I am willing to put capital at risk because I see the potential upside. I feel as though I have a slight probability advantage here. I have a statistical edge. This is a pattern that's prone to repeating. It's repeated tens of millions of times before. So I'm willing to take a calculated risk that this is going to repeat yet again. And I'm willing to risk this amount of capital to take that risk for that potential reward. As soon as you move the stop, that's the first mistake. right? And the market will punish you for that, which again, I would tell you is a good thing, because the idea is for you not to repeat that mistake. So hopefully it doesn't do something like that and you just can't recover. Now you're back to working for a living to try and refund your account. That's a bad place to be in. So what's the value of sitting here for 34 minutes? If nothing else, to get you to the point where you hear this and you don't do that. You don't do it. Right? I've done it 1,000 times. Well, not 1,000 times. I've done it more times than I care to admit. Have I done that? And so you're sitting here for 34 minutes. Let me take the body blows for you. Just trust me. Don't do it. Take the stop. Always the better decision. You can always go back in. Right? And in FX, it's pennies to go back in. Get out. Wait. Go back in. Wait for the next retrace. Evaluate. Where's the trend? What am I looking for? The trend is higher. Okay, I only trade with the trend, so I'm a buyer. Do you want to be a buyer here? Well, if you want to be a swing trader, you want to catch that little squiggle in there, have at it. You want to wait for the larger degree? You're looking for the probability zone? Well, it's setting up right here, and here's how to trade it. All right, there's probably 20 other things I could draw on here, but I'm at 35 minutes, so I'm going to stop it here, guys. Hopefully you get a little something out of that. Hopefully you've got some idea of where the next trades are lining up for this. That'll do it for this one. Just a reminder, if you want to really dig into this kind of methodology and really master it, give us a visit over on our website. You can learn more about what we offer to you there. That's tradedevils.com, or you can go over to Twitter. You can get a link to access our public Discord where you can kind of sample what we're about. All right, guys, back to you later.